All right, so today we have to start with the huge news that Microstrategy is going to be included in the Nasdaq index, the Nasdaq 100. I don't know when the first official trading day they're going to be in it is, but they are going to be included. Michael Saylor tweeted this out last night. MSTR to enter the Nasdaq 100, and this is really big news. Not as much for Bitcoin. I mean, I think it is, I shouldn't say that. I think it is big news for Bitcoin. It's really big for MicroStrategy. And I mean, personally, I did hint last week that I've taken some larger positions, and it wasn't just recently. I've basically just come right out and say it. It is MicroStrategy and MSTY. I've taken large positions in both of those, which I started a while ago, but I've taken even larger positions recently in anticipation of this news and in anticipation of Bitcoin going up quite a bit next year. And it's worked out really well so far, and I think it's going to continue to work out really well. But besides the point, as far as this goes, this is really big news. And why is that? Is because everybody that owns the Nasdaq index now is going to indirectly have exposure to Bitcoin. And this is something that's long overdue. It's only a matter of time until MicroStrategy's in the S&P 500. It's only a matter of time until they're in most other, if not all other major indexes. This is something that's coming. And when that comes, I mean, it already has came in this instance, everybody's going to have exposure to Bitcoin. And as far as MicroStrategy and the whole Bitcoin conversation goes, a lot of people are like, oh, why would you want to buy MicroStrategy? Why not just buy regular Bitcoin? And to a large degree, that is a really good point, because in a perfect world, you do buy just regular Bitcoin. But on the flip side, number one, there's a lot of people outside of America or North America that don't have access to the ETF specifically, so MicroStrategy might be your only option when it comes to exposure in that way. They can't buy the ETFs. Personally, I think MicroStrategy definitely is better than the ETFs. Number one, because you're not paying a management fee, and number two, you have that leveraged aspect of it. Now, technically, you might have that on the way down, but Bitcoin in and of itself is already quite risky. So I mean, nobody is buying, IBIT because they think they're not taking any risk. So I think that if you're going to buy, whether you're debating between the ETFs and MicroStrategy, I think MicroStrategy is a way better option because it just has more upside. It's outperformed, and it's going to continue to outperform most likely. And the reason for that also is because Michael Saylor and MicroStrategy may have found one of the most genius ways in history to make money and to grow a company. This thing that they're doing with the convertible bonds and whatnot is absolutely and utterly genius, and I think it's going to go down in the financial history books as one of the most ingenious things ever. And another thing that makes it really impressive is that eventually we're going to get to a point to where pretty much nobody can do it anymore. And even if they try to do it, which, yeah, you can try to do it, you're not going to be able to do it on nearly as much of a scale, right? One of the main things that is making this so impressive is that they're accumulating so much Bitcoin. Like, they're already over 400,000 coins, and it's extremely unlikely that another publicly traded company gets that many coins, unless one of the Mag 7 starts to do it within the next 6 months to a year. I would say it's never going to happen. And it honestly, as bullish as I am, it's unlikely that one of these bigger companies starts to buy Bitcoin. It wouldn't surprise me by any means, but I would say there's maybe like a 20-30% chance if I was putting odds on it. Back to the point I brought up earlier, why not just buy regular Bitcoin? A lot of people, I mean, let's take Canada or the US, for example, right? Because I'm sure that's where pretty much everyone is from. We have, in Canada, we have the TFSA, which you can put $7,000 a year in. In the US, you have the Roth IRA, which is pretty similar, which I don't know the number you can put in off the top of my head, but I think it's similar. That is money that you can put in and you can make money tax-free on. Where we stand right now, in both countries, Bitcoin is still taxed. I mean, capital gains are still taxed. So I can put money into a company like MicroStrategy or the ETFs, and I can compound that money tax-free. So that's where that comes in. The other question comes from, okay, well, why would pension funds and hedge funds, what incentive do they have? Well, a lot of those instruments, they're not allowed to buy physical or quasi-physical Bitcoin. They're just not allowed. So the ETFs and MicroStrategy are the only options. That's just what I wanted to bring up there. Personally, I have a lot of exposure to both, and the reason for that is that when it comes to MicroStrategy, my plan is just to buy enough so that I have 100 shares, and when I do, sell covered calls. And then MSTY, that is simply a pure income stream. That's all it is. It's paying like a 70% dividend or something like that. Is it sustainable long term? Is it very risky? Yes, but what I do know is that when it comes to MSTY, it's tied to MicroStrategy. And because it's tied to MicroStrategy, which is tied to Bitcoin, which I think is going to go up over the next year, and I think it's still going to go up as time goes on, it's going to go up quite significantly. I obviously you could go down 50%, 60% in a year. I think that's unlikely, and if it does happen, it's probably going to be after it goes up 200%, right? So I don't really care. But anyways, that's what I think when it comes to this. I think that this is extremely bullish. This is just another sign of the mainstream getting on board, and a lot of people are concerned about this. They're like, "Oh, I thought Bitcoin was more private and libertarian, and you don't like the government and stuff like that." And this doesn't really have anything to do with the government, but when it comes to that, my response is, well, we don't get to pick and choose, right? Like we came up with basically the perfect money. You don't get to pick and choose who buys it. If you want to pick and choose, well, the fiat system is waiting. Like that system already exists. If you want a system where you get to pick and choose who buys, that system's already there. So obviously, we're going to have drawbacks. There's going to be downsides. There's going to be risks. But we don't get to pick and choose who buys. The people that make that argument, though, well, you guys should be concerned that BlackRock is buying. And it's like, no, like you don't get to pick. It's one or the other. It's we get to censor who buys stuff, which inevitably just recreates the existing system, which is the whole reason why Bitcoin was created in the first place, to get rid of the existing system. But on the flip side, we don't get to pick and choose who buys, right? That's how free markets work. Obviously, there's going to be some bad people that buy. There's bad people that buy and do bad things with it, right? The media always likes to point this out. But we don't get to pick and choose who buys. MicroStrategy bought another $2.1 billion. This was on Monday. They announced this. And I think they're pushing 450,000. I think they're around 440, 450,000 coins at this point. And the big question, I think, is when do they stop? Or a better question will be, when can they not buy anymore? Like, I think the goal probably is to hit 1 million. Are they going to be able to do it? I think it's going to be really hard. I think it's going to be really hard. I think it depends kind of on how much, like, let's say the government, like the U.S. government announces a Bitcoin strategic reserve and they buy 1 million coins, and that triggers another, round of extreme buying, and Bitcoin goes up to 500, 1 million a coin this cycle. I would say no, but if it only goes up to 200, 300,000, like I think that the average Bitcoiner expects, I mean, there's a lot of them that expect a lot more, but I think that realistic highs for this cycle is probably that 200, 300,000 range. If it goes to there, I think it definitely is realistic. And the other big thing too is that how much of a drawdown do we have, a couple years from now when we're no longer in that big bull cycle? There's a lot of people out there that are talking about that, bear cycles might be a thing of the past. I'm a believer in that. The only thing I differ on is I just think they won't be as deep as before. You're not going to see these 70, 80% drawdowns. I think it might be 20 or 30%, maybe 40%. And as time goes on, the drawdowns are going to be less and less. The bull cycles, I still think, are going to be double, triple every time. At least in the next generation or two. But I think that the bear cycles, I think, are going to become less and less every time, because the ETFs, because the MicroStrategy of the world, and because the mainstream finance bros are going to get on. More and more of them are going to get in on the fun as time goes on. Another interesting point here. This is from Joe Burnett. This is the Apple yearly dividend per 1,000 shares, and he's responding to Dividend Hero on Twitter here, saying, "Oh, Bitcoin dividend $0 every year." And again, people who make these arguments, they're either deliberately misleading people, or they're just complete idiots. And I don't mean that to be rude, but like I've always said time and time again, like saying that Bitcoin isn't a good investment because it doesn't pay a dividend or it doesn't have earnings, it's equivalent to saying that buying real estate is bad because you can't sell it on your stock exchange the next day. It's such a poorly... Calling it a straw man is an insult to a straw man. It's a terrible argument, and people who do that are deliberately trying to mislead you. But this is the Apple yearly dividend measured in Bitcoin per 1,000 shares. And again, if you go back to 2014, 3.8 Bitcoin. 2019, 0.41 Bitcoin. So it's down a factor of 10. And then you go to 2024, 0.05 Bitcoin. So it's down almost a factor of 10 again. So holding 1,000 Apple shares from 2012 to 2014 would have earned 246 Bitcoin. If you would have bought Bitcoin instead, you would have had 7,077 Bitcoin. So this, again, we're talking about more than... That's more than 1,000 times, or sorry, not more than 1,000, more than 100, right? So people, I can't people just can't comprehend this kind of stuff. Like, how can you not admit you're wrong after seeing this kind of stuff? And this is one of the many problems that I've said time and time again is going to hold Bitcoin back, is that there's so many people that just won't admit they're wrong. Eventually, some of them will, but I think that's why I said that I think that we're never going to see more than 30, 40, maybe 50% of the population adopt Bitcoin, because there's so many people that just won't admit they're wrong. It doesn't matter how bad things are. You could go from like a 10,000 Bitcoin to 0.001 Bitcoin in this time, and they're still not going to admit they're wrong. Like, they're just not. Some of them will, but most of them won't. And the last thing I wanted to bring up here is the stock market. Bitcoin's just been way more interesting than the stock market recently, so that's why I'm talking about that more. Stocks actually had a mixed week. The Nasdaq was up a little bit. The Meg 7 actually was up quite significantly, over 2%. If you look at small caps, mid caps were both down over 2%. The equal weight index was down. The S&P was down slightly. And I think the big question when it comes to stocks is, has the market peaked? I think that's a big question. And frankly, I think that we're probably going to chop sideways. If anything, maybe I could see us coming down a little bit. And the reason for that is that there's a lot of uncertainty out there right now, and that's not something the market likes. Now, technically, something could happen with a lot of these overseas conflicts that shores things up. Trump gets in, things start to go smooth. Maybe they don't, and then things go down. But if things start to go smooth, some of these conflicts settle down like a lot of people are expecting. I think that could be a catalyst for things to go up. But the market definitely is expensive right now. We are going into year end. And we're coming on, we're capping off a year where basically everything was up significantly. So I think that there's going to be people that are going to want to lock in a lot of those gains. It's mainly the bigger institutional players. So I think that could provide a good buying opportunity going into the year. But I mean, if you look at the stock market historically, it's that, third quarter and first quarter of the year that typically are the most bullish. So I could easily see a little bit of a pullback here over the next couple of weeks, and then a nice little bull run to start the year, and maybe going into the spring and summer. but I would be very surprised if we didn't see a nice pullback, maybe even 2 pullbacks at some point next year. I still lean on the bullish side because I don't see any catalyst to bring the market down significantly next year. Like, at least as far as America goes, they're still a ways off a recession. The economy clearly isn't great, but is it recession level bad? No. So my base case for next year is a modestly bullish year, like modestly bullish. I think we're definitely going to see probably a 10 or 15% pullback at some point, but nobody knows when that's going to be, and it might not even happen. Right? It really might not happen. Like I mentioned, maybe like it's quite possible that Trump gets in, a lot of these conflicts overseas cool down, the economy gets better, and things start to run on all 8 cylinders, and the market goes up. But on the flip side, maybe some of these conflicts increase. That provides some uncertainty. That spooks the market. Maybe, inflation heats up again. That would certainly spook the market. So anything really could happen. But you also have to keep in mind, I mean, I seen another post today that the Somme rule, which a lot of people are like, oh, it's a guaranteed recession when the Somme rule gets triggered. That was actually de-triggered, or it's no longer triggered, at least where we stand right now. So I again, when you look at the markets, I think it's something like 75 to 78. It's in the mid to high 70s% of years are up. So again, like if I had to put money on it, obviously I would be betting that the market's going to be up next year. But there is that 25% chance that it's down. So the best thing to do, like always, is, I mean, my strategy is dollar cost average into good companies at a good price, and dollar cost average into a small amount into the indexes, and adjust that amount based on whether the market's expensive or cheap. That's my strategy. So anyway, I'm going to leave it there. If you liked the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.